And then, again, because there's no professional support, no lasting buying, the pros will start unloading once they see the market slow down, and then finally they'll really start whacking it right there. And so they'll sell, they'll clear out their long position, actually go short, pushing the market down. So this cycle starts where they're buying it and selling it, buying it and selling it, and they're probing the market for these pockets of demand and pockets of supply. That's what's all important. So really, today, if you manage to catch the move up, count yourself lucky, because the retail sales could have easily gone in the other direction. There was a small double top where you could have made a little bit of money on a short trade, but that's pretty tough coming into, or coming out of rather, a very bullish report like this. There was also, after this whole pattern settled down, you can see there is a very nice pennant pattern. The trouble with this is the pennant actually broke out very late in the trading session. You see here it broke out at about 11 o'clock. The market took off. Really, the breakout point to be more conservative than not would come right here about 95.95. So the trade did wind up with a little bit of profit, but like I said, very, very close to the end of the sweet spot. It gets really tough to hold on to these types of trades. We can go over here to the 15-minute bar. Here's the breakout. You can see above the prior high. Actually here it looks more like a flag pattern on the 15-minute bar. But there it breaks out. You get this immediate hesitation, which is going to cause you to at least have second thoughts. If not, get out of the trade entirely. Again, it's very close to the end of the sweet spot. Then the market just kind of grinds its way up. This is why you want to avoid non-sweet spot trading, because the activity level goes down, the volatility goes down, and it can just get really tough to make a trade and hold on to a trade because we don't get the same kind of momentum. So having said all of that, the market really doesn't have a lot going on. I think we might be able to get a boost up here, but because there's so little space between where the market is now and these highs, remember the 2-to-1 guideline that I have in the kit is just a guideline. I'm not trying to mechanically wait for some 2-to-1 trade, but if I see that I'm going to have to take, in this case, we'll say 37 pips worth of risk, and I'm only going to be able to make about 67 pips, that's just not enough money. It's close, but I think I might get into trouble if I'm waiting for that. If you are monitoring the trade, there might be in the London session a good trade possibility above this 1.9639 area, but again, you're going to have to take about 37 pips worth of risk. So you're going to want to watch this. Not something that you want to put on in an overnight trade. I think if the market can get back down here, crossing through this low, we can get some possible action. Also, one thing that I do want to watch out for is a short. This is going to be at 1.9515. Again, this is going to capitalize on the market crossing down through 9,500, so short below 95.15. This is going to be a 25 pip stop. The reason why is the market should move very, very quickly. Again, not something that you want to leave on overnight. It's something you want to take advantage of in terms of a trading pattern that professionals use. If the market can manage to turn around in light of this good retail sales number, we'll probably get some action and see the market drop back towards 9,400. Okay, so a couple of momentum trades setting up for you in the overnight session. And remember, tomorrow, Friday, could be a light session, but maybe not. Lately, Fridays have been pretty active.